Hawaii's Condogeddon and how the condo market may come to a halt and a crash out here in Hawaii, and how you can make sure that you protect yourself or ensure that you do not buy a problem in the near future. Stick around to get all the details. See you on the other side. All right, guys, like I mentioned in this video, we are going to cover what I am coining Condogeddon, where we are potentially seeing a lot of issues happening, more specifically with some of the condos in Honolulu. I'm gonna go over how you can find those issues and avoid them. But before we get into that, let me quickly introduce myself if this is your first time here. My name is Patrick Long. I'm a licensed real estate agent and investor out here in Hawaii, helping buyers, sellers, and investors with their real estate needs. If you have any questions or want to avoid some of these condo issues that we're coming across, feel free to reach out to me. I got my contact information right here, or you can directly DM me on any of my social media platforms. With that being said, let's jump into getting a better understanding of what is this condo issue that everybody's having out here in Honolulu, and what to look out for when you're specifically looking to purchase a condo out here in Hawaii. So let's jump into it. So let's first get a better understanding of this Condogeddon. What is it and why is it even happening? Well, we have seen in the last couple of years that a lot of these insurance companies, and that's what the root is here, is these insurance companies are losing money hand over fist, more specifically with older buildings that are having issues, and they're having to pay out to fix these buildings. We've seen this happen across the nation. We're seeing it happening here in Hawaii, but more specifically, we've seen it happen a lot in Florida. I'm sure you saw in the past, we had that one building that fell across with all the hurricanes happening. These insurance companies are having to pay hand over fist to fix a lot of issues. And before the new policy comes up in the following year, they're starting to step back and say, hey, you know what? If you have an older building, we are changing our policy and we may not re-up your insurance policy, which means you're gonna have to pay a premium if you want that coverage, which is making insurance prices skyrocket. Or they may be forcing buildings to say, hey, we're not gonna give you an insurance policy unless you fix your electrical or your plumbing or your roof. These are all things that are happening, and the insurance companies are changing up the game and really making it difficult for associations, buildings, and of course owners to hold on to their property without seeing these skyrocket prices in regards to their HOAs, their maintenance fees, and a handful of other things. So let's break this down further. What is the issue? The first one, and more specifically what you hear a lot out here in Hawaii, is that the hurricane insurance coverage is not enough that lenders will be okay with. So we're seeing that there's lots of solutions that people are coming up with, which is basically having to pay a lot more in their HOAs to cover the premium for that new coverage. Or some people are getting what we call gap insurance, which is an insurance on top of the insurance to cover that gap that the current insurance company that's in place is covering. The second issue is, let's say you have plenty of hurricane insurance. Well, if your building, again, is built in the 60s or 70s, this is where we're seeing a lot of the buildings that are having these issues that are older. If they have old electrical, that might be a fire hazard. If the plumbing is super old and we're starting to see more frequent leaks, that insurance company might come in and see that, and they may say, hey, you know what? We will give you a new policy, but before we do have a contingency or a requirement, which is you need to update all of your plumbing. And that might cost $12 million. And if your association does not have enough money in their reserves, then they're gonna have to do what we call a special assessment. Now, what a special assessment is essentially a added payment on top of your HOA or maintenance fee, where they're going to raise money to pay for this plumbing project. And again, if it's a $12 million project and there's a handful of units, let's call it 300 units, they would basically take that project cost and they would divide it across all the owners, because you are technically an owner in the building. And they may say, hey, we need to do this plumbing because we won't be able to get insurance coverage. And to do that, since you're an owner, you are obligated to pay $25,000 right now. Now, there's other different ways that they can structure it. They can just simply increase the HOA significantly. They can get a loan, but generally it's gonna be some sort of money coming out of your pocket, whether it's a couple $100 or $20,000, $30,000, or $40,000 right up front. Now, the next question we have to ask ourselves is, why does this matter? Now, the obvious is, well, it's gonna increase how much it costs to actually own that unit on a month-to-month basis potentially. But more importantly, if you cannot get significant coverage for that building, the lender will not give any future buyer an actual loan to purchase, which basically means the only people who can buy units in that building would be a portfolio loan or an all cash buyer. Now, why is this important? Well, the second reason why this is important is because if you dwindle down your buyer pool and it can only be portfolio loans or cash buyers, that means you have less buyers coming to the table. That means in theory, with less buyers, you have less demand. With less demand, we would see valuations drop. And we all know that we don't buy real estate not only to put a roof over our head, but generally we invest in real estate to increase the value of our home. We'll be able to leverage that by either selling it, cashing out, or using a HELOC, pulling cash out and buying more properties. So what we're seeing is we're seeing a lot of buildings specifically built in the 60s and 70s that are coming across this issue and do not have enough reserves to pay for a new insurance policy or to pay for some of these updates. We are seeing that there's lots of special assessments coming, HOAs increasing, and valuations dropping because of the headaches and the financial troubles that some of these buildings are having. Now that leads us to our next and very important question is, how do we avoid being in this issue or buying a property that's going to have this issue? Well, the first party we want to talk to is people who already own in this building. If you already own in a unit and you have heard that there might be some talks of issues, or you're seeing that your HOAs are increasing, the first thing that I would highly suggest is get involved. And what I mean by that is either get on the board, go to the meetings, find out what's going on so you can decide whether you want to be a part of fixing this issue, utilizing your connections, coming up with ideas and suggestions, and being a part of the solution. Or maybe you're thinking, you know what, I want to get off this boat before it sinks, so you might want to sell your unit. These are things you want to think about, because if you don't know what's going on, you're going to get surprised with, once again, one of these special assessments, or find yourself in a situation where no one can buy in your building unless it's a cash buyer portfolio lender, and then inevitably dropping the value of your price and having you lose money on your investment. The second thing, which might be the saving grace, but we shall see because I don't really trust the government out here in Hawaii, is that there has been an emergency proclamation that Governor Green has put in place that is to help solve this problem, which they haven't really released much information. I actually just got off the phone with the DCCA as well as an insurance company out here in Hawaii, and they haven't really had any information. They just basically said that Joshua Green came out and he said, yeah, we're gonna have an emergency proclamation that's gonna help save all these buildings and these insurance issues, maybe create some kind of subsidies or other options for these buildings to utilize. But we don't have much information. So again, if you want to stay on top of that, I'm going to be staying on top of that because I'm a condo owner who's having one of these issues right now with one of my investment properties, and I'm on the board, so I'm very involved. But make sure you like and subscribe and hit that notification bell so you get notified whenever I drop new updates on that emergency proclamation. Now leads us to our second party. This is going to be buyers who are looking to buy a condo out here in Honolulu that want to avoid getting into this boat or this issue. How do we find out whether that's going to be something in the near future? Well, the first thing you want to do is get linked up with an agent who understands the condo ecosystem, understands the buildings in Waikiki, and knows how to find out or look at the right documents to forecast whether that issue is going to be coming up. So it's really important that you get yourself linked up with an agent. Again, if you want to talk to me, I'd be happy to assist you. I got my contact information right here, or you can actually go to my website, fill out the form, and I'll get back to you and we can set up a consultation. The second thing you want to do is review the condo document. So once you actually get under contract, generally this is when the listing agent will give you these condo documents. Now it's going to be a huge stack of condo documents, generally sent to you in a Google Drive folder or some sort of link, and there are a lot of documents, but I'm here to break down what documents you should be looking at more specifically. The first document you want to look at is the RR105C, or the lender's disclosure. What you want to look at here is more specifically, is there any upcoming projects or special assessments? There's generally going to be a section in one of those documents that's going to specify that. And that's going to be your first step to find out, is this an issue that they're having right now and they're already in the process of fixing? And if so, how expensive is it going to be? Now, this is going to be the document that's going to give you a better understanding of where they are with some of those projects and let you know whether they have a special assessment in place or whether they're going to be increasing HOA significantly. And this is where you would start to dive deeper, but this would be the first layer of doing your due diligence. The second thing you want to look at is what we call a reserve study. This is when they bring in a third-party company that's going to go out and look at all of the age of some of the amenities, like the elevator, the plumbing, the foundation, the roof, the electrical, and they're going to put a timeline on when those things need to be replaced, an estimate of how much it'll cost to replace those, and then you can kind of pair that with the next thing that we're going to look at, which is going to be the finances. So once you actually have a better understanding of what sort of projects may be coming up in the near future or being discussed, you want to look at the finances, because you want to know and have a better understanding of how much money do they have in reserves to fix some of these issues that may be coming up in the near future. If we see that those reserves are lower than 20 or 30%, generally 30% is kind of the bare minimum, then you want to look at how much money do they have there, and based on the reserve study, how much is it going to cost to replace it, and when are they going to have to replace it? Because then you can kind of forecast whether this issue is something that's being solved now, being solved in the near future or going to be solved in the far future, and whether you're going to have enough money to fix that, because this could be a domino effect that could get you in one of those situations where the insurance company might not provide coverage, and once again, devalue your property and or increase your HOAs or have a special assessment. Last thing I would suggest is you or your real estate agent should talk to the association to get a better understanding of what is actually in motion right now. Is there any discussions of projects? Are they working on any projects? Because again, we are seeing out here in Hawaii, it's basically the same thing over and over with these buildings built in the 60s and 70s. It's either going to be foundational spalling, elevator modernization, plumbing, or electrical. Those are generally the 4 things we're seeing in these buildings. So you want to know, are those things already completed? Are they planning on getting completed soon? Or are they not even talking about it? Because that's something you might want to look deeper into. Okay guys, well that pretty much wraps up Condogeddon. Now I'm not saying this to scare you. I'm saying this stuff to educate you and let you know there are still good opportunities out there in regards to condos. It's just really important that you don't just pick a condo because you like the floor plan. You want to look at not only the building, the location, but also the documents, the finances, and understand the ecosystem of the condos out here and ensure that they're going to have coverage with those insurance companies and you don't find yourself with a deadbeat investment. Anyways, guys, I'm not telling this stuff to scare you. I'm more telling it to educate you because there are still good buildings and condos out there, but it's important that you actually are educated so you don't get yourself a bad investment. And that's generally what my job is to assist you with looking at the documents, guiding you accordingly, and make sure that you make a sound investment. So if you want to talk story or get a better understanding of analyzing a property, a building, or anything in regards to real estate, feel free to reach out to me. I got my contact information right here, or you can directly DM me on any of my social media platforms. With that being said, I'm Patrick with PatrickOnlyRealty.com, powered by eXp Realty. Hope you have a beautiful day, and I'll talk to you soon. Aloha.